Okay, everybody, I gotta think of a intro for this YouTube channel when we are getting kicked in the teeth. Happy Friday, happy bloody Friday. We got a lot of stuff to cover because, well, we just got a jobs report, not to mention oil is surging like crazy here, which is definitely impacting the entire market. You got the VIX, which is very much in the green. And the unemployment data came out today, which is sending the market in a very much free fall here. Hold on. Here we go. Okay, so unemployment report. Now understand that we are currently not in a recession. However, there's a lot of people that are saying we've been in a recession for the last couple years now. We've been in a rolling recession, okay? Textbook definition of a recession is when you have two back-to-back quarters of negative GDP growth. However, the labor market can fall off way before that happens. So the unemployment report today, we ended up losing 92,000 jobs, which just doesn't make sense because we're getting reports that we are adding jobs. Now we're getting reports that we're losing jobs. The unemployment rate ticked up, which it came down the previous month a little bit, and now it's a little higher. It's like, what is going on here? The data is so inconsistent that it's sending people spiraling around at the government data center, BLS, and it's also sending the Federal Reserve all around because the whole point about lowering interest rates is, yes, if the economy is going to be deteriorating, we got to lower interest rates. But if inflation is going to be coming back, even though our inflation report for the last CPI and the last PCE has really been trending down, but oil is a inflationary component. And the fact that oil right now is very much, we talked about this yesterday in a video that I uploaded, very much spiking up. So right now, oil is above January's high. It's above July of 2024. It has broken above April 2024. And now it is challenging October of 2023. Okay? So if we go all the way back here to September 28th, I'm going to go ahead and draw this on a chart here so I can save it in future videos. This is the next area. If we break over, I mean, oil, there's really nothing stopping oil from going very much higher. And it is incredibly crucial that this does come down because, like I said in yesterday's episode, this affects everything and everyone in the economy. It affects gas prices from you filling up your car. It affects factories because they're going to be losing money because gas is going to be more expensive. It affects just everything in the world. So this is very important right here. The VIX is definitely up today once again. It ended up spiking up around 12%, I believe, on the day. So anytime the VIX are at these levels, you got to be buying stock. Did I buy stock today? Oh, yes, sure did. I did. What stock did I buy? I'll get to that momentarily. But pretty much right now, the indexes are very much, in a way, trending down to potentially hitting the 200-day moving average on SPY. You got the Qs, which the Qs are made up a lot of companies in SPY. You basically have the 50 and 100-day moving average dancing now, which is very bearish. We could very well trend down to the 200-day. The IWM, the small caps, have definitely stopped their bullish momentum. And we have broken the 100-day moving average, just like we did back in November before Thanksgiving. The real question is how far are the small caps going to basically pretty much trend lower? And I talked about this in yesterday's video that a lot of these companies that have been beaten down, such as software companies, Adobe is what I'm holding, Palantir, I'm also watching Microsoft, Salesforce. Then you also have the banking sector, such as SoFi, JPM. They're affected by interest rates, inflation. So obviously oil going higher, anything negative to do with the economy is going to impact SoFi. Bitcoin is obviously falling back down below 70,000. Robinhood is going to trend down with them. PayPal is in its own world, same as Meta, but Meta right now is very much getting hit. So my long positions right here are very much have been taking a beating. But if we look at some of these companies, like yesterday, Walmart was down on a shocker. Yesterday, Walmart was actually very much down. Hold on one second. I just loaded up the wrong chart here. Here we go. Yesterday, Walmart was down by 5. I believe it closed at like 4% and some change, very close to 5%. So, I mean, you're seeing now a lot of companies, and Walmart has been on a very bullish trend since really November. Walmart has very much been on a bullish, hey, if you're a Walmart shareholder, congratulations. As for software, AI stocks, semis, we've been going the opposite direction. So I did buy 2 companies today. From the title of this video, it should be no surprise here. I did buy a good amount of more shares of SoFi, and I did buy more Hood shares. For anyone that is new here, welcome. If you enjoy my content, I keep things real here. I'm also doing a public channel profile challenge. I'm looking to take a couple tens of thousands to 6 figures in 17 months. Basically taking this amount to 17 months. The account challenge on this channel has started 2nd of January of this year. I do have some account challenge rules for myself, such as depositing $500 per month for the next 17 months. Although, if the market's going to be playing games, I'm probably going to be preloading a lot of that $500. If the market completely sells off, I may just go ahead and front load. I believe it's like $7,000 essentially, because it's great buying opportunities. So my account is very much, as a lot of people like to say, risk on. But is it really risk on? Because the companies that I have are growth companies. Phenomenal companies with phenomenal management teams, minus PayPal. Yeah, PayPal is really kicked in the nuts. But they may be getting acquired. Let's not hope on it too much. I could very well just be taking a loss on PayPal like many other people. Oh well. But I ended up buying some more SoFi shares here. I can't, Webull is annoying. It doesn't show. I really wish my main profile is on Robinhood. I really wish I just made a second Robinhood account, because Webull is good for overnight trading and also trading at 4 a.m. Eastern Standard Time. Woohoo! Which I have bought stock very early in the morning. Hopefully 24-hour trading comes back to Robinhood. But I ended up adding $250 worth of shares to SoFi. I've been nibbling on into SoFi. I own... oh boy, let's go ahead and see. On my private account, I have 1,642 shares of SoFi. Initially, I just wanted 1,500 shares, and the company continued to go down to Chinatown, so I got bonus shares. Now I own 443, 2,085 shares of SoFi. I have a very large position at AMD also. Pretty much, my private account consists of just about identical, plus a couple other stocks as well, too. But I own all these stocks on here in my other account, just in a very much larger quantity. But it's pretty humorous, because if you've been following me the last couple of months, I've been posting my buys here on YouTube of what I'm personally doing. And at one time, SoFi was very much above AMD. And I mean, my total cost, my cost basis on SoFi is very much less than AMD. Could SoFi trend back down to the $15 range? Well, we just had our fearless leader buy at $17.78. Anthony Noto, the man himself, bought $1 million worth of shares. His own money. Not awarded his own friggin' money. That's what we want to see. He bought the dip on SoFi at $17.48. So why did I buy more SoFi shares here today? Because of this reason. Look at SoFi on the chart. Pretty much, SoFi on the chart, and SoFi right now is actually recovering, but pretty much, I mapped out where Anthony bought. We had a nice rally on SoFi, and then we swooshed down. I ended up buying right around this level, the low 18s. Right now, SoFi has gone above this very key area of support, which is all the way back to 23 January. You can definitely argue that, hey, the next level of support is really this area down here. True. If we do dip below Anthony's buys, I'm going to be nibbling some more SoFi shares. But here's the reality. The reality is that we just got a bad jobs data, okay? We don't know how long this conflict is going to be in the Middle East. It will be suicidal, political suicidalness for the Trump administration if he continues this into the summer. You want the market to bottom before the summer so we can... we all can do very much in the green on our... I'm a retail investor and also retail trader. I'm not affiliated at all to a bunch of dumb politicians, but politicians would never want to let this carry on into the remainder of the year for midterms. That would be like political suicide, right? So get all this nonsense out of the way now. We're essentially in Liberation Day 2.0. SoFi had a nice push right near $20. And the fact that we just gave it all up. The thing about SoFi is that the stock is so beaten down and the company's growing. Triple beats. It's going to be hard to keep this company down. If this economy does go into a recession, which it would be a shell shocker, getting bad data is one thing, but you need multiple months of bad data. We're getting like 2 months of good data, 1 month of bad. We're getting some good, some really bad, some really good, some bad. It's all over the place. However, we're still getting somewhat good. Now, there are a lot of people saying that, hey, these people are forging the numbers. And then on the flip side, you have the Trump administration saying they're laying off government workers, which is why the unemployment rate is going up. Job rates and job growth is kind of going down. It's all over the place because they're making the government smaller. Do you believe the Trump administration? If you do, this is nothing more than buy the dip opportunities. If you don't, we could be experiencing a lot more pain across all stocks. Maybe SoFi is going to go into the low teens. Crazy, right? Absolutely crazy. So I'm taking advantage of this. Now, as for Hood, I ended up buying Hood because obviously we pushed back down of the gains that we got. Hood was actually near $85 yesterday. And the fact that Hood is very much down from yesterday, I picked up some shares. And I'm okay with picking up shares because I know that Hood is following Bitcoin, just like I know Robinhood is following the broader market here, or anything with interest rate cuts and also anything economy data. So once this economy data pretty much recovers, and once Bitcoin recovers, SoFi and Hood are going to be rock and rolling. So as for my profile, it's pretty crazy. Palantir has actually recovered very nicely here. I feel very comfortable owning Hood and continuing to add Hood. If I need to bring my total cost on Hood into the $6,000 range, I'm okay with that. Because once Hood gets out of this Bitcoin-like era that we're in right now of a downward cycle, you know, a company like Hood, and also I listened to their conference call. If you did not, you should. The CEO stated, hey, we obviously took a hit because of Bitcoin, this is innovating. This is motivating us to innovate new ways to make up for the lost revenue. The guy is a phenomenal CEO. He's an innovator, just like Mark Zuckerberg is. So therefore, a company like Robinhood, I'm okay. Hey, if Bitcoin is going to go up and then goes down, obviously Bitcoin was above 70,000 yesterday. Now it's not. Hood went up. Hood went down. I'll accumulate more shares here. So, we're really just going to have to, or rather what I'm doing, I'm not a financial advisor. I'm just someone sharing what I'm doing. But if the market's going to be nasty and I'm going to have very low cash on this profile, I'm going to be front loading a lot of cash into this account to obviously be just continuing to buy the dips here. And honestly, if you are part of great companies, this could be nothing more as a generational buying opportunity. Last year for Liberation Day, I'm going to close off this video momentarily. Last year on Liberation Day, I went all in. I depleted all my cash. I spent over $100,000 of hard cash. I don't trade on margin. I believe that is honestly really bad mojo. And it's kind of like trading on a credit card, in my opinion. You could have a different opinion. Hey, you do you. But I feel very safe buying companies with my cash that I've worked very hard for. And Liberation Day last year, I made bank. I was buying Palantir on two different profiles in the 90s, the 80s, the 70s. Ended up selling, made 100%. Sold in the high 150s, the 60s. I was buying Nvidia below 100. I was buying AMD shares below 100, which I still own on my private account. I was buying Meta was another one. A couple other companies as well too. Very risky companies I made out. And also I was buying SoFi shares on this account on Liberation Day. So the whole thing about it is that this could be Liberation Day 2.0. Maybe it's not as bad. Maybe we're just in a slight correction. But either way, this could be a generational buying opportunity. And this opportunity could be a very big money-making opportunity for anyone out there that definitely believes in these management teams and believes in growth companies like these. Because a company like SoFi, they're not slowing down revenue anytime soon. They've been operating in a high interest rate environment. It's pretty funny. Very funny. AMD, the party has not even started. Meta, it's really a gamble if you want to believe that their CapEx spending is going to increase their revenue. Adobe SaaS, literally over a week ago, I was down by nearly 17% on Adobe. Now Adobe and the software companies are trending higher. A lot of SaaS is recovering. Hood, Bitcoin, obviously, Palantir software, they're recovering. They put up phenomenal record-breaking growth rates. And then PayPal, it's in its own world. Tomorrow, I'm going to be releasing a Saturday video. I probably will be talking about PayPal. Maybe I'll talk a little bit about SoFi too. But otherwise, be safe, everyone. This concludes today's episode. Subscribe if you want to see more content from me. Take it easy, and later.